Howdy, y'all. This is Brandon with Crypto Trades and Tech, and this week's update, what I wanted to talk about was something that I think has been confusing a lot of people with how I analyze the market. I wanted to talk about position sizing versus trading. So kind of what we look at when we develop our spot position sizes and what we're looking at for trade. For me, this is a lot of different data that goes into these two aspects, and so I wanted to kind of explain what data I look at and how I allocate and then how I make trades. Of course, we're going to do some technical analysis and look at some news as well. Before we get too far into this, I'm not a licensed financial advisor, so please use caution. You might end up losing all your money and living in a van by the river. So what I wanted to start with is when I bring up a lot of these long-term macro charts, you can see my dashboard here on CryptoQuant. In this dashboard, I've got open interest. I'm watching the open interest market. Really good signal for shorter term moves when open interest gets overheated. There's usually some volatility ahead. The market wants to wipe out that leverage in the system. And then we've got the funding rate, which also tells us which side of the trade most traders are on as far as that open interest is concerned. The exchange reserves, how many coins are on exchange? Are they coming off of exchange or going onto exchange? Off of exchange is obviously bullish. That indicates more hodling behavior. And coming onto exchange is bearish, as that indicates willingness to sell. The hash rate here on this chart, a lot of the same things over on Glassnode, coins on exchange, funding rate. But in this one, they have a better chart for the number of addresses with a small balance, 0.01 Bitcoin or greater. Now, I use this as a proxy for information about how many participants are active in the market, how many wallets have some skin in the game. Now, when I bring up a lot of this data, I'm more focused on my position allocation. So my position allocation ranges from crypto holdings to stable coins. And there's different seasons that I'm moving funds around. There are different times that I'm looking to get yield. Like lately, I've been largely yield farming and trying to find yield return, knowing the market was going to be mostly sideways, not as much trading lately, more yield farming, because again, we expected the market to kind of compress before the next big move. But then also, what percentage of funds do I have in Bitcoin or Ethereum, my major holdings, Cardano, Elrond, and so forth. And then as I research new projects, that's what informs me about what allocation I want to put towards these smaller cap speculative projects. So the big ones that I'm building positions on lately, AVAX isn't so much speculative, building new positions on AVAX, but A0 is the big one that I'm building a position on right now, trying to buy these dips. But given that I think it's Bitcoin season, you can see here on this blockchain center.net, their alt season versus Bitcoin season index. For a number of reasons, we're very strongly in Bitcoin season. So as I'm building these new speculative positions, I keep them as small positions, and I'm largely invested 70% plus into Bitcoin during Bitcoin season. Now, when we do make our way up to alt season, in that transition, I will be more aggressively buying or moving funds, taking profits and moving them to altcoins for the big altcoin moves. But this is more of a long-term investing position allocation set of data. I don't use this data for day-to-day trading or week-to-week trading. So my trading system is more of a trend trader. So if I were to zoom out here on the daily, what I'm looking for is I'm wanting to identify trends. Is this an asset in an uptrend or a downtrend? And then what I want to do is find support levels and buy as price comes into support or into resistance in whatever the direction of the trend, or sell. So for example, if I identify that this is a short-term downtrend but a long-term uptrend, what I'm waiting for is the short-term downtrend to end, for the trend to reverse, and I buy into support as we are resuming this uptrend. So I always try to buy the dip as much as possible. Now, there are times when we do in very strongly trending markets. Over here, for example, on this side of the trade, we were taking breakout trades. But now that we've been sideways for a period of time, and all this sideways action, we're mostly buying as price comes into support, especially lately. And And I use the moving averages a lot as my main trend indicator. A lot of people use a lot of different indicators, RSI, MACD, Bollinger Bands, whatever. I just use the moving averages, the simple moving averages. And that helps me with my bias as to which direction I think an asset is. So for example, we're very neutral on Bitcoin here, relatively speaking. We did have some momentum. So we had a very strong downtrend, which when we broke that downtrend, we took trades on the break of this downtrend, a little bit of a breakout, but that's more of a buy the dip. Coming out of this huge dip, we're taking this correction out. And then once we made these highs and then put in this higher low, when we were gaining some momentum over here, then we bought the dip and took profit up here again. So my trading strategy is very much to look for momentum and trade with the trend. If I think we're in a local uptrend, I'm buying into support. If we're in a downtrend, I'm selling into resistance. So I wanted to make that point clear. There's been a lot of kind of arguments that I've been involved in where I think people misunderstand, or debates really, we'll call them debates. People misunderstand the purpose of the data that I'm presenting. For me, there's a big difference between taking trades, which are very much just based just on price action and technical levels, versus position allocation, which is very much based on fundamentals research. But I combine the two. An example of using fundamentals to help me build positions, if we go look back here on A0, for example, as I built this new position, I had to go find the chart, the coin market cap chart, because we don't have a long enough chart on TradingView for this. But what I was looking at here is this breakout, this initial listing on the first exchange, centralized exchange. And then our initial positions were right here at 90 cents. And there was technical reasons for that. There was support right at the high 80s and low 90s from this prior price action before we have any price history over here was on exchange. But using technical analysis and momentum trading helps me to identify when it's a good time to start allocating. So I do my research. I find coins or projects I want to invest in. And then I wait for momentum. I wait for an uptrend, and we start buying the dips in an uptrend. And technical analysis is also what helps me as I see that a project may be getting overheated, helps us to exit to, we'll say, trim our positions as price breaks out, especially when we have these parabolic breakouts. Now let's go take a look at Bitcoin here to close this session, weekly update. And I'll just give you my read on what I see going on in the market. Again, I'm fairly neutral. Obviously, price came right into the 200-day moving average, and we have an initial rejection, but really at this point, it's just consolidation under here. You see I had this pennant drawn in originally, and here, before too long, we may be getting a flag pattern. We'll see if that holds or not. But you see here I have marked a support zone I'm looking to try to buy into. It's right between, this is the 111 moving average right now, the 111, which is the pi cycle moving average, and then the 50-day moving average. Right in between there, and these moving averages are starting to compress exactly what I wanted to see. I do want to see price draw the 111 and the 50 up closer to the 200, finish compressing there, price to ride the top of these. But what I'm looking for is a dip back to those moving averages in this horizontal support area. You can see it goes back quite a ways. We've had a lot of price action right through that 42,000 area. It's been a really important pivot for a long, long time. Now that we're back above it, I'm looking for price to come back into that pivot and then try to take some entries in that area for what I hope is the final phase of this compression of these moving averages. We start getting this one curled up, and get some price in this compression zone, and then a breakout above the 200, and perhaps off we go. Based on the fundamentals, I think that's the more likely scenario, is that we find support right on 42, we get some compression here between these moving averages, and then we break out of this range we've been in and finally break this overhead supply. Now, of course, we have the Bitcoin conference this week, so all kinds of things can happen. We'll have to keep an eye on the news. I'll do my best to retweet or anything that I see, so I'll try to be active on Twitter, and then we'll try to go live either Sunday night or early next week to recap my thoughts about the conference. So a couple more fundamental points here. So I brought up, there's been a pretty big increase in OI. You can see a little bit better on this chart that I tweeted. I'm looking for, you see every time we've had these big OI spikes, we talked about this in my last video, This is kind of also why I'm thinking we're coming back to 42. I think 42,000 would give us a pretty good reset in the OI. As you can see here in this very strong uptrend we had in 2020, we would have an uptrend in resets in OI in conjunction with the reset in the price. So I'm looking for that. I thought this was interesting. Will Clemente tweeted this out. The Bitcoin supply last active 1+ years ago is near an all-time high. The fundamentals across the board, the fundamentals look very much like early 2020, more so than they look like 2018 for sure. This is just a general takeaway that I have. Thanks everybody for your time. Please like and subscribe if you found this video useful. We'll see you next time.